Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MENGNIU Dairy interim report. China MENGNIU Dairy Company Limited offers a diverse range of businesses and services across 5 segments. The company's key offerings include liquid milk business, ultra-high temperature milk, milk beverages, yogurt, and fresh milk ice cream business, dairy-based ice cream manufacturing and distribution milk formula business, milk powder production and distribution cheese business, cheese manufacture and distribution other segment, plus raw materials for daily products manufacturing plus trading business, plus organic food and formula products for babies and toddlers, plus commercial factoring services, plus financing guarantee services. The MENGNIU Dairy stock price has experienced a modest increase over the past year, despite facing some challenges. Several factors have contributed to this growth. A key factor was the company's share buyback program in August 2024, which demonstrated confidence in its business development and future profitability. Additionally, analysts at Seeking Alpha rated MENGNIU as a buy in April 2025, anticipating a raw milk price recovery that would positively impact the company's top line and bottom line. The company's profitability enhancement initiatives and strong earnings and revenue growth forecasts for 2025-2027 have also contributed to its stock price increase. Furthermore, improved debt management, with a reduction in net debt and a 30% growth in EBIT over the past year, has enhanced investor confidence. While MENGNIU Dairy faced challenges, including a decline in revenue due to industry supply-demand imbalance and weaker consumer demand, these positive developments have helped drive its stock price up. The primary drivers of revenue growth and decline can be summarized as follows. Revenue growth drivers. The company's revenue has grown due to its diversification of distribution channels, expansion into lower-tier markets, and development of customized products for BN business sectors. The introduction of new products such as Organic Series, 200 ml Master Limited version, and specialized categories like Atwo beta-casein milk have also contributed to growth. Additionally, the company's omnichannel capabilities, rapid growth in sales through convenience store channels, and high-growth potential channels both online and offline have driven revenue expansion. Revenue decline drivers. On the other hand, the decline in revenue can be attributed to persistent oversupply of raw milk and lower than expected consumer demand recovery. The sale of goods has also decreased due to lower demand, resulting in a decrease in revenue from RMB 44,645,616 in 2024 to RMB 41,543,969 in the current period. Net income decreased by 16.4% year-over-year, primarily due to a loss of RMB 913.5 million, resulting from changes in the fair value of additional dairy cows. This decline was also influenced by lower-than-expected consumer demand recovery and persistent oversupply of raw milk. In contrast, profit margins showed improvement, with gross profit margin increasing by 1.4 percentage points to 41.7% and operating profit margin rising by 1.5 percentage points to 8.5%. These contrasting trends highlight the challenges faced by the company in managing its revenue and expenses amidst market fluctuations. The company's financial performance indicates a strong ability to generate cash from its core operations. According to the provided summary, the company is indeed producing positive operating cash flow, with a net cash flow of plus 2,806,099 RMB. This suggests that the business is capable of generating sufficient funds to cover its operational expenses and invest in growth initiatives, positioning it for long-term success. The company's debt level and interest expenses have undergone significant changes. Initially, the debt level increased from RMB 778 million to RMB 4.3 billion between December 2024 and June 2025. However, by page 88, it had decreased to RMB 17.7 billion. This indicates a net decrease in debt level. Interest expenses also saw a notable decline, decreasing by 31.2% from RMB 884.3 million to RMB 608.1 million between the same periods. The reduction in interest-bearing bank loans and inferred decrease in debt level suggest that the company's financial situation has improved, leading to lower interest expenses. The company's financial performance varied across different segments and regions. The liquid milk business, room temperature product business, and precision nutrition segment were among the top performers. Additionally, the China MENGNIU Dairy Company Limited showed strong results in its room temperature business unit, chilled product division, lower-tier markets, and stronghold regions. In China, the company's chilled product business unit and fresh milk business also performed well. The fresh milk business saw growth across various channels, including offline, online, convenience stores, and membership stores. On the other hand, the cheese business was a notable underperformer. Management is emphasizing technological innovation in dairy farming to reduce costs and improve efficiency. The company is also advancing digital transformation with AI at its core, driving improvements in operational efficiency, organizational effectiveness, and product quality. Additionally, management is focusing on sustainable development through dual carbon initiatives and improving quality and efficiency to drive growth. The company has a history of paying dividends and buying back shares. Specifically, it has paid dividends in both 2025 and 2024 with an amount of RM991,229 each year. Additionally, the company has also bought back shares in these 2 years, with a total of 181,328 in 2025 and 50,855 in 2024. Concerns about inventory buildup and supply chain disruption in the dairy industry. The dairy industry is facing concerns regarding inventory buildup and supply chain disruption. Pages 10 and 27 highlight periodic raw milk surplus and persistent oversupply, respectively, indicating a potential imbalance between supply and demand. Furthermore, page 28 notes a decrease in selling price of raw milk, which may suggest some inefficiency or disruption in the supply chain. However, not all indicators point to disruption. Page 83 mentions decreasing inventories, suggesting that efforts are being made to address any issues. Nevertheless, pages 55 indicates potential inventory buildup or supply chain issues due to a decrease in cost of sales. These mixed signals highlight the complexities and challenges faced by the dairy industry in managing its inventory and supply chain. That concludes the financial summary for MENGNIU Dairy. Feel free to comment below, and I will be happy to answer them when possible.